back in the mid 90s, I bought up a bunch of domain names, names like Usher and Hope and Michael and Mike and Speaker and Angel and Voice and Strategy, because I thought one day you could build businesses on these because they're great words in the English language and everybody knows how to spell them and say them, and they have very powerful brands. And I had some singles and some doubles. I launched some things. I sold Voice for 30 million and I sold Angel for 100 million. And then we launched alarm.com, and that's a multi-billion-dollar business. But then I launched a business called Usher on the Usher domain, and it was going to be a mobile authentication application. So it was a mobile app that was multi-factor authentication that you could use to seamlessly log into a website or authenticate a transaction, whether it's a financial transaction or a ticketing transaction. So it was this idea of public-private key cryptography in a consumer app, because you couldn't rely on, and we wanted to replace passwords. Right? Passwords are garbage. Everybody knows passwords are garbage. You could almost think of it as like it's a software version of a signing device, like a Bitcoin wallet or hardware wallet. But we did it back in 2012. We didn't have the distribution channel, and it turned out that it was an idea a bit ahead of its time. And ultimately what happened was Apple just kind of built login with Apple into their iPhone, and then Microsoft issued Microsoft Authenticator, and they just gave it for free to 100 million businesses. And Microsoft Authenticator has got like 1/100th of the functionality of Usher. But what I learned, right? What did I learn? Well, first of all, it failed, right? I thought it was going to be a multi-billion-dollar thing, and I named the yacht Usher while I was launching it. I didn't name it after it failed. I named it because Usher was mobile identity, and I thought it was kind of cute to name a yacht after my mobile identity, and it made a good name, and you can read the sign from a long way away. So it's a good handle for a boat for safety reasons and practical reasons. But what I learned from the endeavor is, sometimes you can overthink things. Like you're better off. The winner in that market was Microsoft and Apple or Google. Like people log in with Chrome, they log in with Apple, they log in with Microsoft Authenticator. The winner is the simple, brainless idea that has just enough functionality, replace the password, that you have the distribution channel for. You can jam it down a channel to 1 billion people or bundle it. And we were like the innovator with this, Swiss Army knife that did everything, but we didn't have the distribution channel, and it was a little bit before its time. Maybe one of the things that made me appreciate Bitcoin is I probably came up with 20 ideas that I thought were the best idea ever. I went through this period, from your 30s to your 50s. You're like, I'm going to invent this, I'm going to invent that, I'm going to invent this. And whenever you invent something, you think it's the best idea ever. And then you don't know it isn't until the market tells you it isn't. And the market's going to tell you, most of them will fail. A couple may achieve a 100th or a 10th of what you thought. Occasionally you find a really good idea, but you shouldn't be so proud that you're not willing to embrace somebody else's idea if it's better. So the great irony, right? The great irony of life, and Elon Musk says sometimes the most ironic outcome is the most likely outcome. The irony of life is, after 30 years in business, after I created 20 ideas and after some succeeded and a lot of them failed, my biggest success is somebody else's idea, right? When and I wasn't even looking for it. I was kind of kicked in the back by a golden horseshoe, if you will. And so during the lockdowns, we had a problem and we discovered Bitcoin, and that was Satoshi's idea. And we kind of just grabbed it, defensively, because the choice was either that or a quick death or a slow death. So it was really like a life raft or a life preserver. And then it became an opportunity. And then it became a strategy. And then all of a sudden in the past 12 months, we realized it was a really good business. We could build a really good business on it. It wasn't our idea and I didn't invent it, but the truth is we made 100x as much money for our shareholders and our employees and everybody involved as all the things that I invented. And so, yeah, that yacht behind the yacht kept the name Usher. It reminds me of something that I thought was a brilliant idea, but it didn't turn out that way. And it reminds you that even when you think you're 100% right, you know, it's quite possible that you're not, and you probably ought to have the humility to appreciate other people's thoughts on the matter.
There's no doubt that you are laser focused on Bitcoin. You've had a lot of opportunities to take money out of Bitcoin and profit, but you're not doing that. You're only accumulating. So I'm wondering, what is the purpose of all this accumulation in the end? Do you want to be a Bitcoin bank? I've heard words of that. Or, you know, there'll be a point in time where you'll have a lot of influence in the Bitcoin network, and having accumulated so much, what are you going to do with all that influence?
Bitcoin represents the most certain thing in the financial universe, right? And Archimedes said, give me a lever long enough and a place to stand, I can move the world. Okay? Bitcoin is the place to stand. I'm not trying to change Bitcoin at all. I'm just standing on it. The question is, what am I doing? I'm trying to digitally transform the capital markets. The world that I'm changing is traditional finance world. And here's my observation. Equity capital markets, for the most part, value companies based upon a promise, an expectation of future cash flows, which another way to say it is the companies have no money, but they promise to get some money over the next 20 years, and we estimate how much they're going to get, and that's the value of the equity. Our company's position is we actually have the money. Right, so we have the money now. Maybe you can value us at a premium, but right now the company is 65% or 60% of the market cap of the company is the money. Whereas if you look at a typical company like Apple or Microsoft, 5% of the company is money, and 95% is just expectation that they might get money in the future. Why is that? That's because money is toxic if you're using bonds, treasury bills as a capital asset. So if the money that corporations hold is toxic, if it generates a 3% after-tax return, and if the cost of capital is 13%, then you destroy 10% of your capital a year. That means that every conventional company is capitalized on toxic money. And so my mission is to capitalize companies on virtuous, clean money. So my company is issuing bonds and issuing preferred stock that's backed by Bitcoin. And our mission is to create a new theory of credit, right? We want to issue billions, then tens of billions, then hundreds of billions, then trillions of dollars worth of credit instruments that are backed by real money. And that's what we're doing right now. We're the largest convertible bond issuer in the world last year. I would like to be the largest convertible bond issuer this year. And those convertible bonds are the highest performing, most sought after bonds in the world because they're backed by Bitcoin, by real money. We're going to sell billions of dollars of preferred stock to a market, and it's going to be twice as good or 3 times as good as the existing preferred. So preferred stock investors get a benefit, and then we're going to buy Bitcoin, and our common stock shareholders are going to get a benefit, and the Bitcoin network is going to grow, and the entire crypto economy is going to grow. And so the long-term plan is just securitize the entire market. And last year we raised about $22 billion of capital. If we can raise 22 billion, then 40 billion, then 80 billion, then 160 billion, then 320 billion, we'll just keep raising more capital. And you would say, well, when is it going to end? Well, when we've got 1% of the fixed income market, that's going to be $3 trillion, Christine. And then it won't end, right? When we get 1%, we'll be going for 2%. And then we'll be going for 4%. So there's really no reason to ever end. And you're like, well, what is the value you're creating? And the answer is, we're giving all the fixed income investors an extra 200 basis points of yield every year with less risk. right? That's the value we're creating. We're basically rationalizing the equity capital markets and the fixed income capital markets. We're improving the credit quality and we're improving the returns because, like, for example, if you're holding $5 billion of Bitcoin and you issue $1 billion of credit instruments and the Bitcoin is trading with a vol of 60, there's like an 80 to 100 basis point risk that you'll be under collateralized in 12 months. That means that you ought to have investment grade credit, but the market's treating you like junk. So we can pay junk bond rates and offer investment grade credit, and someone gets an extra 400 basis points of boost, and we can afford it because our use of proceeds invest in a network that pays 30 to 60% a year, and then they benefit. And so what we're really doing is we're digitally transforming the capital markets to the benefit of everybody involved.
If Bitcoin has a massive downturn, which has happened with the volatility, drawdowns of 90-80%, and there's less interest in MSTR bonds or equity, could that force the company to sell Bitcoin at a loss to cover its debt, potentially unraveling the model? And they also criticize the stock's premium. It's often trading far above its Bitcoin holdings net asset value. Is that seen as a bubble ripe for bursting if faith in the strategy falters?
Yeah, we've learned a lot over the past 4 years, and I think we've built an indestructible balance sheet, right? If you think about what we're issuing, we're not borrowing money as on a junk bond or a senior bond that comes due in 5 years. We're actually issuing a preferred stock, which is a perpetuity. You know, you don't hear the word perpetuity that often. It means that we're never paying the money back. Like when we sell $1 billion of a preferred stock, we're borrowing $1 billion forever, for 1,000 years. So it's a perpetual swap, and it's a perpetual swap with no covenant. So Bitcoin could trade down 99%. There's no, I mean, people talk about margin call on X. There's no margin call coming. It's just not happening, right? The instruments that are constructed, you know, don't have Bitcoin pledged as collateral. And so we could take an 80 or a 90 or a 95% drawdown. We'd be just fine, right? What we've done is we've constructed the business such that the leverage for the equity comes from intelligent sources. And the most intelligent source is clearly preferred stock, right? Because it's like all the leverage you get from a bond, but none of the liabilities of a bond, right? Someone's going to give you money forever. You never have to pay it back. Think about it, right? It's like, why, if I offered to give you money forever and you would never pay it back, and, you know, your friend said, well, don't take it because you might get liquidated if your investment, you know, draws down 75%. You're like, yeah, but on the other hand, I expect it to go up by a factor of 100. And if I take the $1 billion, I'll have $100 billion. And if I don't take the $1 billion, then I'll have nothing. So, and by the way, it's like, there's no liquidation risk. So these are just, they're not really that risky instruments. It's very intelligent leverage. And the more important point is that this is an engineered company. The leverage that's generated by the convertible bonds is beneficial to the equity, and the volatility of the equity is beneficial to the convertible bonds, and the leverage generated by the preferred stock benefits the equity and the convertible bonds. And the more preferred we sell, the more strike we sell, the more leverage and volatility for the equity, which is beneficial to the options traders, which drives up the premium in the equity, which drives up the premium and the price of the converts, which opens up the convert market, which drives up the price of the preferred stock, which loops back into the capital market.